Bharti, is it visible?
Yes, sir, your screen is visible.
Single slide, double slide.
Two slides.
Okay.
One,
Now,
just one. Yes.
yeah. Utkarsh, can you do the recording?
Yes, sir. We are live on YouTube, so we can start.
Welcome everyone. Welcome to today's session, hosted by GSTZen on how you can do your year-end compliances from the GST perspective. We are at the end of the year, financial year 22-23. Though technically we only have a couple of days left, but however, we would be filing GSTR 1 of March in April and 3B by 20th or 22nd accordingly. So I would say this is a last opportunity to rectify everything that you need to rectify so that we avoid unwanted notices. Today, everything is system driven and we are getting notices from the department seeking various information and explanation. So it is very much important that we avoid notices which could be avoided, right? So the agenda for today's session, we would look at what are the points that you need to take care for doing the turnover side reconciliation, then input side reconciliation, a general procedures for you to get ready for financial year 23-24, and the software which a new module that the Zen has released is tracking your notices, especially if you are a group company and you're a CFO, you are looking after 2-3 companies. So rather than going to each of the portal login and checking, you will be able to get it at one place. Conversely, the login is available with one person. Maybe the email ID given is of a generic info, admin or accountant, someone who has left or someone who is not accessing. You should also parallelly have those notices available to the tax team of the organization, right? So with that intention, so that one can be very effective in managing the notices, there's a notice tracker, and my colleague Praneeth would be doing a demo of how the notices get tracked. So let us begin with looking at what is the turnover and the tax liability related aspects when it comes to closing of your books of accounts. Firstly, what you have to do is you have to reconcile your turnover. When we say reconciliation of the turnover, please consider GSTR 1 as your sales reporting, GSTR 3B as your liability discharge module. Look at it this way: R1 is your turnover reporting and 3B is your liability discharge. 75 subsection 12 of the Act says the whatever the values that you have disclosed in GSTR 1 will be treated as a self-admitted liability. You know, today the law is changing and it is going to become day by day even more stringent. A new sub rule has been introduced wherein they will be there. All this while we are only getting a notices asking why your 1 and 3B is not matching, but now you will also get a notice wherein they would say that why should I not block your credit ledger. And the new rule which I'm talking about is rule 88C. It is not notified yet, wherein if GSTR 1 is higher by GSTR 3B by a specified percentage, then a notice in the form of DRC 01B will be issued. Okay. So if you are not attending to it, the difference will be collected the money from you as a tax due under section 79, which means some money that you are due to the government under section 79, that is what it would be collected. So we need to be very much on top of it, why the data is not matching. Let us start with understanding what do I say reconcile the turnover. April 22 to February 23, you have already filed your GSTR1. In the month of March, when you are filing your in the month of April, when you are filing your March GSTR1, you should also have a delta of what is there in the books of accounts. It is very likely that someone would have asked for correction in the invoice. For example, you have raised an invoice in the name of, let's say, Bharti, and the Bharti comes back and says, hey, look, the payment has to, this is, though I have placed the order, but this is not for my company, this is for my sister company. Please raise the invoice, the bearing GST number of weight. Now, you have already reported in R1 about this invoice. So you have to correct the GSTR1 with the customer name. Now, this is not impacting your turnover, but you still have to make the correction. It might so happen that the books of accounts sometimes are not integrated with your billing application. You might have a separate billing application and the books of accounts separately. There are chances that while filing the returns, you could have missed out some turnover reporting, or you have reported the turnover, but someone has deleted it from the books of accounts. Say at the end of the month, to ensure the pressures are met, the marketing team would have raised the invoices saying that, okay, these I got the purchase order, this material gets dispatched maybe on 1st or 2nd of the next month, kindly raise the invoice. But the order wouldn't have come, it wouldn't have materialized, it would have been cancelled for the purpose of the books of accounts. But in your R1, this cancellation wouldn't have happened. So that means in the month of your April, where you are filing your March return, you got to include your March data, and also you have to do a one-time reconciliation of April to March. Now you may ask a question, what about the tax liability of the previous year which has been missed out? Should I need to report? Please note, GSTR1 will not have an inch of a previous year turnover or subsequent year turnover. GSTR1 is only turnover for the given period. So April 22 to March 23 will only contain the turnover pertaining to April 22 to March 23. This is one thing that you have to see if there is any delta that needs to be taken care. Point number 2 that you need to be mindful of is people always report whatever is there in the sales register, but you might have some other income which has not been reported. Miscellaneous income. There would have been some scrap that has been sold, wherein some smaller money that has been collected, or you have made a reimbursement of expenditure which is credited to expenditure side of the P&L. So it's not apparently visible in the P&L as your income. You have sold your fixed asset. What is there in your P&L is only profit or loss on sale of asset. You might have done a cross charge between the head office and the parent. So considering all this, you also have to make an adjustment entry by passing. It is like, if you know it has been, an invoice has been issued, you should report in table 4A of R1 with the respective dates. If it is a B2C, the supplier, you got to go back to the respective month. The table 7 amendment will be happening through table 10. You will have to make the amendment. Please note, in GST, you can make any amendment only once. So you got to make a reconciliation, how much B2B or B2C amendment that you need to do, both upward and downward. You have to take care of that and you have to report. So we attended to the turnover which is missed out, or turnover which is not matching, some corrections to be done. Like there is an increase in the turnover, there could also have been situation of reduction in the turnover by way of credit notes. Please note, section 34 of the Act deals with how one has to deal with, if in what situations a credit note can be issued and how one has to deal with. Bad debt cannot be a reason for reducing my turnover and the liability. Credit note means I have made a supply and the goods have come back. Most likely, people in the accounts department might not be aware that the goods have been returned. So you also have to do a reconciliation of the credit notes, wherein you have to check that if there are any credit notes which have been issued but now been accounted in the books of accounts itself. In case if it is a discount, where you are giving a discount to the customer, you also have to check that has this discount been agreed upfront. For example, you might have said that, okay, if you make the payment within 30 days, 60 days, you will be giving a 1% additional discount. So instead of 100 rupees, now the customer is paying only 98 rupees. While you have already reported GSTR1 as 100 and tax thereon as 18 rupees. But now you will have to make it as say 98 rupees and tax thereon would be instead of 18, it would be say 17 rupees 70 paise. So some 36 paise, you will have to reduce it. So in those situations, you will have to raise a credit note. Most of the times, again, the accounts department would be unaware of this fact. Yeah, you got to check that. Next, it is now mandatory that the HSN code that you will have to issue is up to 6 digits if the turnover is more than 5 crores and above. If the turnover is less than 5 crores, you have to issue the HSN code for 4 digits. The 4-digit HSN should be reported in the GSTR1. Now, this HSN, most likely it is adopted basis some understanding. You also have to speak to your consultant and get a clarity as to the HSN that you are using is right or not. That assessments by the department would always also look at what is the HSN you are charging. If you are doing a wrong HSN, most likely you will also be adopting a wrong rate of tax. So you have to cross check that. The next thing you also have to see is check if the schedule 1 transactions, which is deemed supplies, the stock transfers, have this been applied or not? Is the cross charge, has it been done or not? That is also something you have to check. RCM liability is one-time review. I have a detailed slide for it. I'll just come on to it. In the meantime, if anyone has any questions, please put your questions in the chat. We will also have an opportunity so that you can unmute yourself and ask. So to summarize and report, in GSTR1, we always have to do a multi-dimensional reconciliation. We also have to see what is my turnover that I have reported in the books and what is the turnover that I have reported in R1. And the data which is there in R1, is it matching with 3B or not? Not just that, I have raised e-way bills. So whatever the e-way bills which have been generated, are those tax invoices have been reported in the GSTR1 or not? Today, e-invoice is mandatory for 10 crores and above. The data of e-invoice sometimes might not travel to R1. So you also have to cross-check if there are any invoices where e-invoice is done but not reported to R1, you will have to see. Wherever you have done the export of goods with payment of tax, check IceGate has reporting the same. If there are any errors, they will also give you shipping bill number wise errors. See if there are any errors like that. Basis the place of supply, you will have to discharge the tax between IGST, CGST and SGST. You cannot say that some tax I have paid. When I have to pay 18 rupees, I paid 18 rupees. How does it matter whether it is 9 rupees CGST, 9 rupees SGST or 18 rupees IGST? So Act doesn't permit. So Section 77 of the Act says that if you are paying a wrong tax, later you still have to pay the right tax and collect a refund of the wrong tax that you have paid. And this turnover that once you finalize, let's say you have finalized my turnover is 8 crores. This 8 crores you will also have to segregate rate wise. And you should also segregate how much is B2B and how much is B2C. You got to segregate. And you also got to segregate in case if you have exports or zero rated supplies, how much is with payment, how much is without payment. Please note table 8 of the R1, where you also have to report exempt nil non-GST supplies. This has to be reported in table 8 of the R1. Again, the people do not take a serious step for reconciling the exempt reporting of exempt or non-GST supplies. So a couple of points which we need to see in terms of the tax payment and the tax liabilities. So you also have to see whether if the advances have been paid, if you have received, this is a common area people make mistake. Table 11 of R1, you report the advances. The advances that have been paid have to also be reversed, meaning adjusted when you raise an invoice. So when you are issuing or reporting the invoice, you will have to reverse the advances. This is common area where I have noticed that people report advance but forget to reverse it. And if you are making any export of goods, it is mandatory that you also have to realize the export proceeds. A new rule 96A, which got introduced a couple of years back, where it is mandating that you have to get the export proceeds. Otherwise, whatever the refund that you have given, you have taken has to be issued, given it back to the department. And if you are raising an export bill, a shipping bill has been created, you should export the goods out of India within 90 days. And if the goods have been sent to the job worker, it is mandatory that you collect the goods within 1 year in case of the input and within 3 years in case of the capital goods. If the goods are sent on SOR, sale or return basis, then the time limit to convert it as invoice is 6 months. Within 6 months, you have to raise an invoice. In case if the other authentication is not done, it is now mandatory to do an other authentication for a new registration. But for old registrations or registrations which got migrated, so when you log in, it will show, it will pop up the other authentication is not done. Please get it done to avoid penalties, to ensure that the refunds are processed. Otherwise, the refund will not be processed. So friends, these are aspects with relating to reporting of turnover in R1 and the corrections. Along with the turnover, now in the previous slide, we have seen how to compute the tax liabilities. So you have to do a reconciliation of the taxes that have been paid, a reconciliation of the taxes that have been paid. How much is the tax I should ideally pay this year? The tax I have to pay this year is whatever the value that I have reported in GSTR1 of the current year, plus in last year table 10 of GSTR9, in R9 last year in my table, if I have said that some amount of the taxes paid in the next year, that means in current 3B, my previous year R9 table 10 value and the current year R1 value should be there. If I have made some adjustment, I can reduce that. So you have to do a reconciliation of whatever the taxes that you have paid in 3B. This is the first minimum tax that needs to be paid. Second, there might be a situation where you have done an error. The reverse charge liability in my GSTR 3B to be reported in 3.1D. But you might have ended up reporting in 3.1A itself. That's fine, no problem. You can always correct it. Check whether you have taken the ITC or not. You have taken ITC. But if you have an accumulated ITC and you are reporting and adjusting all the liability in 3.1A, that means you have not discharged the reverse charge liability. It is mandatory that the reverse charge liability to be discharged in cash only. You have to ensure it is in cash and check that the ITC that you have availed under RCM should be lower than or equal to the liability that you have discharged. In case you have identified that some taxes that you need to pay are short paid and you are paying now, then you have to pay with interest. At what rate? 18% per annum, but computed on a daily basis. Let's say if it is not paid for a period of some 25 days, interest would only be computed for 25 days and not for 1 month. Any doubts to anyone on the turnover related before we move on to ITC related reconciliation? If you have any doubts, you can put your questions in the chat. Let me move to the next aspect, which is ITC related reconciliation. Very important. Today, there are many notices that are coming. When I say notices, a notice under section 61 asking you to reconcile whether the values that you have reported is in line. Initially, when the GST got implemented, we were taking credit basis the strength of the invoice. A year later, we started reconciling with 2A and the books. A year later, we got a new rule 36 sub rule 4, which said that whatever the credit visible in 2A plus 20% only you can take. But now it's not even 2A. You can only take the credit if it is there in 2B. Now, difference between 2A and 2B. 2B is if the supplier has filed his R1 within time, that is by 11th of the month, I am eligible to take the credit in this month because it would be visible in 2B. And if he's filing after 11th, let's say he's filing on 15th, it would be visible in GSTR 2A, but not visible in GSTR 2B. So you also have to draw a reconciliation that for the purpose of reconciling the books of accounts, you have to reconcile what are the credits that are there in 2A and 2B. Akshay, when you are saying point 1, repeat please. Which point of which slide? I don't know. Maybe you can be specific. So you have to be making sure that the 2B, you can always say 2B indicates the maximum credit that you can avail. The quantum of credits that you are availing month over month is only to be compared with 2B. If you are doing a YTD reconciliation of the credit that is there in the books of accounts and the credits that you have availed or eligible to avail, you can use 2B. But you are doing any particular month. Let's say for the month of October 22, you are doing a reconciliation, then please use 2A. 2A will give you purchases for the month. 2B will give you credits for the month, the credits that you are eligible to take. See, on a longer horizon, both 2A and 2B will match. But on a short duration, in 1 month, 2B will be higher. In another month, 2A will be lower and 2B will higher. So there would be difference between the balances. At one point, both would be matching. This is the first reconciliation that you have to do. The second thing that you have to do is, you might have also missed out taking the credits because it was not there into 2B last year. So you have not taken. So the credits that you have not availed, that means purchases for the financial year 21-22, the credits that you are supposed to avail in the current year, you can refer to table 13 and GSTR 9 table 8C. The balance would be available in these two tables. So in this year, I have to take credit is the purchases of this year and the carry forward amount of the previous year. In a plain simple language, 2B will always say how much credit you are eligible for. 2B can have the previous year data, previous month data, current month data. But 2A will only have the current month data. That is something that you have to always check for. And in case if you have something you have availed, you also have to check, like how we were doing a reconciliation for the credits. You should see whether the credits that you have taken are genuine. When I say genuine, are you legally entitled to take those credits? We have section 17 subsection 5, which is very spoken upon section, which says these kind of credits, even though used for the business. For example, I have purchased a motor vehicle for the purpose of employees transportation, not allowed. I have constructed a factory building, not allowed. Taken a medical insurance for employees, not allowed. I have taken my staff out, team outing and had a good food celebration. No, not allowed. Likewise, there are many credits which have been blocked. You are not supposed to take those credits. Please check if you have taken any of the credits, even though if it is there in 2B, you are not supposed to take. The next thing, if you are taking a credit and that credit is used both for the taxable supply and the exempt supply, you have to reverse it. This reversal you will be doing on a monthly basis. Again, on the year, you got to do it once again. So whatever the turnover that is there, total turnover during the year, you will be multiplying your by exempted turnover into your common credits, where the ITC is exclusively used for the taxable supply. Don't need to be worried, but ITC used both taxable and exempt. You apply this formula, exempt divided by total into ITC, and reverse that credit. You will have to do again once in a year, that you have to do it in this month. In this month, you also check whether the RCM credits have been taken it or not. If you have not paid to the supplier within 180 days, you have to reverse the credits. I'm sure in the last month session, you have noticed that not just the reversal of the credits where the supplier payments are not done, you also have to reverse the credit if the supplier has not filed his 3B. So you got to be very diligent about it. Then if you have multiple head office and the branch office, you have to do you have to obtain an ISD registration, and you have to split the credits into all those things. If there is any disposal or the transfer of the asset, the ITC can also be transferred by filing ITC02. You need to find a way of reconciling books of accounts with the electronic credit ledger. I have sample accounting entries which will assist you how you can reconcile between electronic credit ledger, cash ledger, and liability ledger between the books. How you will reconcile, I have an entries, I'll show you in a while. Then wherever you are discharging self-tax invoice, you have to, on reverse charge basis, you have to create a self-tax invoice, which will enable you, a tax officer, to determine that if you are paying, let's say, some 20,000 you are paying, it will help you to determine that on what basis. Maybe it is travel expenditure, maybe it is legal expenditure. So you will be able to see why you have discharged it, HSN wise, rate of tax wise. So one self-tax invoice every month, that is sufficient. So this is on the input tax side. Now there is another angle to the input tax side. Whenever I am making a purchase, I have GST in my purchase, so I am verifying the input tax. What about those expenditure where there is no GST while you are making purchases? It means most likely there is a reverse charge liability. So here is a slide. When it comes to the reverse charge liability for services, I have listed what are the different types of reverse charge liability for the services that you will have to pay. And whenever we say RCM, everyone talks about GTA or legal. But today's standing, you can see all the things which are in the box are under reverse charge. If you are wondering why only some are in blue color, most likely your business has one or the other aspect of this. Like you have availed a transport service, you have availed a legal service, you might have sponsored an event, you have paid money to that event, you will have to pay GST under yourself. You have obtained a service from the government by renewal of any license or anything, even that will have to be considered. If you have a director and you have paid them sitting fees other than salary, you have to do RCM. You have a security agency, RCM. Hiring a motor vehicle, RCM. Recent addition, if you have rented an immovable property, let's say you have taken a house property for your employee, staff quarters, or directors, or you have taken a property for your own office and it is a residential property, the owner is not charging any GST, or the owner threshold limit is less than 20 lakhs and is not charging GST. In any case, you will have to pay GST under reverse charge. This is for services. So please do call out all the expenditures during the year and allocate how much of that GST is not there. Wherever GST is there, you check for ineligibility. Wherever GST is not there, classify into these categories and see if reverse charge liability needs to be discharged. This is for services. What about goods? There are very few list of goods, and some people are applicable for it. Where basically it is cashew nut, silk yarn, lottery, used vehicle, and PSLC certificate. In these cases, the goods where the reverse charge is applicable. So now you have to post book closure entries, the parking of entries between your 3B to the output liability ledgers. So let me actually show you how those entries would be there. Then we'll come back to getting ready. Yeah. So how do I do an adjustment in the books of accounts? Let's take the output related. Whenever I'm making a sale, let's say 100 rupees plus 18 rupees, I will debit the customer account with 118, credit my sales 100, credit output CGST 9 rupees, output SGST 9 rupees, or output IGST 18 rupees. This is my first accounting entry. But the value that is there in my output liability ledger has to be transferred to your electronic liability ledger. Because after you file your GST or 3B, you are now ascertaining your liability. So you are debiting your output CGST, SGST, IGST ledgers and crediting your electronic liability ledgers. When you do so, there are two purposes that gets out. One, you will also having an external confirmation that so much of the balance is matching with the external books of accounts, which is liability ledger. Second, this is kind of forensic accounting. So while you have posted this entry, ideally balance in this ledger should become zero. If it is not zero and showing credit balance, that means you have disclosed a lower liability into the government portal. If it is a debit balance, that means you have paid taxes more than what you have accounted in the books. So that way you have control on all the balances that are getting posted. Now, when I make my purchases, I will record the purchase account debit, say 100 rupees, input CGST 100, input CGST 9, input SGST 9, vendor account credit 118. This input CGST SGST also bases the credit that you have availed in 3B. Table 4A is the credit that is availed, 4B is reversal. So if there are any reversal also, you will account. So the credit that you avail, you will debit to electronic credit ledger. The 4B reversals that you have done, it could be transferred to P&L account or any other appropriate account. And you will be crediting your input CGST. So this way you are tracking how much credit that you have availed in the portal for that month and how much is the balance that is left. So if there is a balance in your input CGST, that means these represents the purchases which have been made but not visible in your GST or 2B. Both liability and credit entries you have to do for the regular and RCM entries. And these also will enable you to tackle if something temporary basis you are reversing, it will be able to track. And when you have to discharge the taxes, you will debit the cash, you will make the payment through cash. So you will debit electronic cash ledger and credit your bank account. After you do offset in 3B, basis your offset, you will debit your liability ledger and credit your GST credit ledgers. Now this is I have given you in a small way. Someone can also do it in a very detailed way also. Someone can do in a very detailed way also. Coming back, so we have reviewed the account. Sorry, yeah, we have reviewed the book closing entry. The other points. Please see what are the branches, godowns that you have, whether you have updated in the portal or not. Other account to be updated. See the current directors are there or any other change that is there in the directors to be updated. The phone number, it is still of the old accountant or whose email ID is there. Please see that. If there are any branches that have been opened in new states, so additional each state there should be one registration. More than one, it is up to you. Whenever the goods have been sent to the job work, you have to file ITC 04. Turnover more than 5 crores is half yearly. Turnover less than 5 crores, it is yearly. Refund, we also have 2 years expiry for refund. Make sure that you get the refund is filed within the 2 years. Notices are issued. Serving of notice means if the notice is shown in the government portal, even that means the notice are being served. So you need to have a robust system to track the notices. That is where Praneeth will be showing a demo in a couple of minutes from now. Lastly, how do you get ready for 23-24? Now, couple of checkpoints for 23-24. See, there is no not necessary that you need to have fresh series of documents, but you got to ensure during the year it has to be unique. So you want to continue the last year series, permitted. And 500 crores and above, you need to have the dynamic QR code for B2C supplies also. If you're a small trader, which is less than 5 crores, you want to go into QRMP scheme, you have to do it on a quarterly basis. That means for financial year 23-24, for the first quarter, within 30th April, you have to apply. Composition scheme limit is 1.5 crore. If you want to opt for composition scheme, you have to do now. You can't do it after the beginning of the year. LUT for next year has to be filed. If someone has missed LUT for last year, you can still file it now. Please do it. If you are a GTA and you want to levy the GST and collect it under forward charge, you have to file an annexure 5 with the government before 15th March. It should have done. And since it's a procedural lapse, even now you can do it, but at least please do it. E-invoice is mandatory if your turnover in the previous financial year exceeding 10 crores. So if your 22-23 turnover exceeds 10 crores, from 1st April, you have to be ready with e-invoice. In case if any one of you needs any e-invoice assistance integration, you can always reach out to GSTZen. The time limit to correct any of this, ideally, it should happen in the same month. In case if you have missed, you still have time till 30th November, and I wouldn't recommend anyone doing by that period. So I would always say use technology. Technology will help you in saving time, where you can reconcile lot of things with ease. Please give up that pivot tables, sum ifs, VLOOKUP, a simple macro, doing a complex percentage and trying to do a near match, all those things. I think that is history. You shouldn't do it. Use Microsoft Excel only for presentation, not for doing any original work. And the tools will help you to fetch the data from the government portal automatically, helps you to reconcile the data, present it to the management, send a reminder emails. Like when you use Zen reconciliation tool, it will also send an email to the vendor saying that these credits are not visible. The tools will also help you to file the GST returns automatically to the government portals. All these reconciliations are there. You will be able to do it. So yeah, adjustment in the books of accounts, we have seen this. I think we can now go to managing the notices. Let's see a live demo of how the notices which are there in the government portal can be accessed, and it can be looked at by the team, CFO and other people who can actually take action on it. Yeah. So with this, let me stop sharing my screen, and I invite Praneeth to present how the notices can be managed. Praneeth, you are there?
Yes, sir. Am I audible?
Yes, Praneeth. Well,
Yeah. So let me share my screen.
and people, you can put your questions in the chat box. Once the session of the Praneeth is over, you can unmute yourself and also ask the question. We are here. Yeah, so here is the Praneeth, can you come from the beginning? Can you log in? Can you come to the home page and just log in? Log out here. Can you just log out? Yeah,
Yes,
no
sir.
problem. Yeah, that's okay. So once you, whenever people log into GSTZen account, on the screen you can see multiple number.
He
So
said to open
assist you basically to track multiple companies, or in one company I have 10 branches, I will be able to see as a CFO or the group head, or if I'm a chartered accountant serving different clients, I'll be able to see. Now let us log into one account. Can you log into one account and fetch the notices in that account on it?
Yeah, sure.
Okay. So here we are logging into one account, and let us track the notices for this account. So to track the notices, we need to have the username, password.
Just a second. As this is a preview build,
Oh,
I'm gonna.
yeah.
Okay.
So you will be asked to enter a username password. The moment you are selecting it, it is asking you the captcha. So you will enter the captcha. Is the portal down?
No, sir. Okay. Okay. This is logged in. So as soon as
Okay,
the
login. Yes,
okay.
good.
Yeah.
So as soon as you log in, the step one you have completed. The step two is where you will be syncing the notices. You just click on this button. Right now there are no notices. The moment you can see, I clicked on this, it on the left side, it started fetching the notices and fetched all these notices. So you will be able to see the notice ID and issued by which the state or anything, whether it is an order or a demand. And this notice is for what? Whether it is a registration certificate or seeking some clarification. When this notice has been issued, what is the due date of this notice? If there is any demand, you will have a demand of it, and you want to download a copy, you can download it. So the any given point of time, you will always be current that when the notices have been synced, and if you want to just refresh, you can just press that sync button. It will refresh with the new notices which are available. That would be coming onto the screen. Yes, Pranit, please.
Okay. So when the user clicks on the download button, the PDF will be directly downloaded to your download directory with the notice order ID as well. So each time the old notices will be saved, only when you press on the sync button, it will be refreshed. So currently this is the phase one of notice tracker. So in the future, upcoming changes will be making OCR, like making a better better
Yeah, so
detailed, okay, better detailed the explanation from the notices downloaded.
yeah. So what Pranit is saying is you have this need a help and contact us. This is going to be even more it is going to become even more better, wherein you will get a textual form of that notice and an assistant as to how you can reply back to that notice, and you can reach to an expert who can assist you in drafting the notice. Yeah. So this is the beta version. This has been released to some of the select customers for the testing. Most likely it would be available for all the users from the Monday of Shishir. The next week, this is going live for everyone. Pranit? Yeah.
Yeah, within 1 week we can release it.
Yes. So right now, basis the feedback from the select customers, this is getting changed. But you can see just on a click of a button, you will get the notice. For all the Pro Plus users of the GSTZen, this feature would be available at free of cost. There will not be any charge for handling these notices. So these notices would be downloaded and it would be there in your account. Any given point of time you can see. There is also advanced analytics that is getting built upon, which will help you to analyze this notice. What is the penalty for not replying to the notice within the time, and by which time you will have to reply to this notice? All this information that would be coming up. Anything else, Pranit, that we need to show?
One more, in upcoming versions, we'll be sending a notification on whether if you have received any new notices or the due date is coming closer. Or something like that.
Correct. Yeah, so this was one of the requirement in the users is as and when these notices have come, there can be an email that is sent to the users. That feature is there, that's coming up, and you will be able to see these are the notices you have already seen. A section where these are new notices that have come from previous sync to the current sync. These are the new notices, and the other these are the old notices. You will be able to see that. Yeah, so this is the new feature that Pranit is building. Very good, Pranit. Yeah, anything, Pranit?
That's it for now, sir.
Super. So friends, this is on the notice management. So now the floor is open for any questions that you have. You can ask the questions. You can unmute yourself and you can ask a question. So we are here, and you can put a question in the chat. We will take up the question. So there's one question. I am under composition scheme on section 10(1). Am I required to file anything to keep availing composition scheme for 23-24? Yeah, opting in to the composition scheme is definitely has to be done once. If you are already in the composition scheme, you don't need to file anything new, but you want to opt it out, so you will have to specify that, okay, I'm opting out for various reasons. You continue under the composition scheme, you don't need to file anything. Purushottam is asking, please give insights on rejection received from customer on tax invoice and shown by them in R1, and we are booking it as a credit note in the books and availing ITC. So Purushottam, that needs little clarity. Credit note cannot be a reason for availing ITC, but instead of they rejecting their purchases, they are making a fresh sale to you. So ideally, you should book it as your purchases in your purchase register. Against the purchases, you will be taking the input tax credit. Arun, it's saying for us, it is coming, showing us coming soon. Yes, Arun, as I said, this feature is given to select customers for doing the demo. And if you are a Pro Plus user, this would be available free of cost. So check your subscription. If someone has to upgrade, it can be upgraded. A question from Hirak, that there is a auto amount field in 3B ineligible ITC under 16.4 ITC restricted during POS rules by the GST portal. These credits patents ineligible, so should be removed from these credits appearing in 2B while filing 3B, or should we file the amount anywhere we are not going to claim? Yes. So there is a change in GST or 3B reporting. All the credits in 2B has to be divided into two categories. Category 1, as per the portal whether eligible or not, as per the portal whether ineligible. If it is eligible as per portal, it will go to 4A5. If it is ineligible as per portal, it will go to 4D2. So your total credits is divided into two buckets. What is ineligible as per the portal? If the supplier filed their R1 late, that means the 16 subsection 4, the due date has elapsed, or the place of supply. I'm here from Karnataka, but the place of supply is Maharashtra. I am not eligible to take the credit. My counterpart in Maharashtra can take the credit. So those have to be passed to 4D2. Those which are there in 4A5, you have to see whether it is eligible for you, because 17.5, all other tests you have to see rule 42 T1, T2, T3, all those tests you have to see. If according to you that it is eligible, you will report it into 4A5. If you think they are not eligible, you will report it into 4A5 and 4B1. If you want to defer the credit, you don't know when you have to take, then you will have to report it to 4B2 as deferment of the credit. So these are the various methodology in which you have to do the reporting of it. ITC reversal for 3 samples should be shown in 17.5 column or other column. Yes, it has to be under 4B1 17 subsection 5 column. If purchase return is shown as sale at the time of raising the credit note not passed, will it be allowed by GST authority? Ideally, I would say the documentation matters. If the documentation they are issuing a new tax invoice, then that shouldn't be an issue for claiming the credits. Yeah. Any other questions? Perfect. We are well within the time. And if you have any questions, you can always feel free to reach to me. And you can always also reach to the support number of the GSTZen for any clarifications on how you have to subscribe to the Proplex plan, or how you have to automate your books of accounts and reconcile your books of accounts and the data coming from the government portal, or if you want to integrate your software directly with the government for portal e-invoice, all those services you can always reach to GSTZen. On this note, yeah, we are close to 4, well on time. Thank you everyone for being here and attending the session. And if you have any questions, you can always reach out to support at gstzen.in. Always reach to us.